This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Good news, team. We have an exciting new sponsor here at the Crypto Conversation, and well, they are perfectly positioned for today's changing investment environment. Because with market volatility so high and the expected returns for stocks and bonds so low, I tend to agree with the analysts at JP Morgan who have declared that alternative assets are no longer optional. And that is good news for those platforms who can provide access to the top alternative asset classes like Masterworks. Yes, Masterworks.io has solidified itself as the platform for investing in contemporary art. And Masterworks is on a mission to democratize art investing, which is a 1.7 trillion asset class. How do they do this? Well, Masterworks is the first platform to make it possible to purchase shares that represent an investment in multi-million-dollar artworks from iconic artists such as Banksy, Kaws, and Basquiat, all at a price point tailored to you. And since 2017, Masterworks has sold a number of iconic artworks, with each returning over 30% net IRR to investors. Legally, I have to follow that with past performance is no guarantee of future results. Now, if you want to get in early, just go to masterworks.art/cryptoconversations to skip their waitlist. That's masterworks.art/cryptoconversations. And you can see important Regulation A disclosures at masterworks.io/CD. And now it's on with the show. My guest today is Chiente Hsu. Chiente is an ex-managing director and global head of quantitative investment strategy and research at Morgan Stanley, and over the course of her tenure there, she spearheaded the cross-asset effort to develop content-driven quant products that have been utilized globally, and due to her endeavors, Morgan Stanley is now recognized as a leader in a quantitative investment strategy. Chiente is now the founder and I think the CEO of Alex, an open source DeFi development company that is built on the Stacks blockchain. Very excited to talk to you today, Chiente. Welcome to the show.
Thank you so much, Andy. Thank you for having me.
It is a pleasure. Now, I've given a reasonably good intro there, I suppose. We know you're from, you've spent time at Morgan Stanley. We know you're a quant, as it were, but I'd love it if you could please introduce yourself and just kind of round out a bit of your backstory, because it is fascinating, and I'm sure it's very relevant to what you're doing today. So wherever you want to begin, please introduce yourself.
Sure. So my name is Chiente Hsu. I was born in Taipei, Taiwan, and I grew up in Vienna, Austria, Österreich. That's also where I received my PhD, and I became a tenure track professor in economics there. The reason why I would say I became a quant is that when I moved from Taipei, Taiwan to Vienna, Austria, German is a very difficult language to learn. But, every time when, my classmates, the professor were telling jokes, it was hard for me to catch up in the very beginning. But as soon as there were formulas written down on the blackboard, that's just my language. So, math is a universal language. I think that's when I developed this, passion in math, in quantitative kind of science. So after, I would say in 1998, I joined Wall Street. So that's more than 2 decades now. I started at Credit Suisse and Morgan Stanley. And as you introduced me, that I have been always developing quantitative strategies there. And in between, I also published a book titled Rulebased Investing, and it was published by Financial Times Press. And, I started getting interested in crypto because I was right there, at the center of the 2008 global financial crisis. And we have observed a lot of the inefficiencies, but we can talk about like that later. So that's my background, coming from academia to investment banking, Wall Street, to beginning of the crypto.
Yeah, fascinating, Chiente, that you mentioned that book that you have published by the Financial Times, I think you said, and that was back in 2014. The book was called Rule-Based Investing. So, yeah, maybe if you could just give us the quick high-level summary of how you would approach investing and what you mean by rule-based investing. I can see on Amazon it says the book has gained accolades as an elegantly simple rule-based framework for earning persistent returns. So what does that encompass?
So number one, investing should be something that's boring. One should not invest according to the emotion. Once you have a set of rules, you should stick to it. And there are certain rules that Finance 101 teaches us. So, for example, diversification is very important. Don't put everything in one basket. What it means is, for example, don't just try to invest in one stock or one bond, and stick to the rules. So don't let the emotion override you. For example, in this current very volatile market environment, right? If you start getting very emotional, fear-driven, and you sell everything, then you tend to sell at all-time low, and you have to take a loss. So, for example, there are a few, bits and pieces. The other thing is, for example, a lot of people say, "Oh, this time is different. Every crisis is different." Actually, as human beings, we really can only learn from history. And if you look at historical data, we can learn a lot.
Yeah.
So that's just a few tips.
Absolutely, and I feel slightly uncomfortable hearing some of those rules, Chiente, and I'm sure some of my fellow crypto investors and DeFi degenerates will also have something to ponder there, just because it is, as I think you just said, such an incredibly volatile time in all global markets at the moment, but particularly this week has been incredibly volatile in crypto, and I'm certainly going to come back to that and get your thoughts and analysis on that. So listeners, I think will be that would be really beneficial to get Chiente's perspective on that. Before we do that, though, let's learn a little bit about this thing called Alex, Chiente. So as I said, it's kind of like a DeFi platform built on stacks. So what's the big idea, Chiente? What's the background and the origin story for Alex?
Sure. So we got my wonderful co-founder, Rachel, and myself. We come from traditional finance. So she was at JP Morgan, Goldman. I was at Credit Suisse and Morgan Stanley. And we started getting interested in crypto because, 2008 global financial crisis,
Yep.
The inefficiency of the traditional financial system, right, grew tremendously. Over regulation, bloated middle back office, etc., etc. So it was about a year ago that we started talking about building a Goldman Sachs on blockchain. So that was a year ago when the idea of Alex got conceived. And, I was on the phone with her, and then, we were talking about crypto, Bitcoin, etc. And we just started thinking that, we both have this financial engineering background. We know how to build things, right? We are not hedge fund trader, but we know how to build building blocks, which, what financial services comprise of. For example, primary market, secondary market, fixed rate, fixed term instrument for lend borrow, and all this we know how to build. So we thought, okay, this is what we should do, right? Our vision is the finance of the future. That would be the one that is permissionless, decentralized, and accessible to everyone. And that's how we created Alex. That's its automated liquidity exchange. And so I would say, as you rightly say, so Andy, Alex is is a DeFi protocol built on Bitcoin via stacked smart contract. So think of us as Goldman Sachs on Bitcoin, but only we are automated, decentralized, and we are very lean. I know this, people might say, what you're talking about, you're building a government blockchain, it sounds so ambitious, but that's exactly what we have done. And we are, marching forward without any stop. We are building a bank on blockchain. Why? Because in a very regulated environment, right? So we are looking and building beyond the current DeFi. I mean, DeFi is a fascinating place. There are lots of interesting innovations such as Uniswap, Curve, DYDS, etc., etc. But we, Alex, want to position ourselves for the, almost for the end game, right? Where TradFi, CeFi, and DeFi will cross, will integrate, and we want to compete meaningfully as simply as Fi. So in this environment, we are very bullish on DeFi because, it is not just like cool, right, to have a DeFi, but because DeFi make it possible, that's something which is impossible for TradFi and CeFi. And that is a trustless transaction with minimal counterparty risk. And that you can expand your business with far lower balance sheet constraint via TradFi and CeFi. So that's our vision of Alex.
Okay, I love it. That's really nicely said. And so if I'm looking at the Alex website or some of the documents that you've put online, it says, Chiente, at launch with Alex, you can, using your Bitcoin, you can lend your Bitcoin to earn some interest. You can borrow Bitcoin without risk of liquidation. You can mitigate risk with taking out a Bitcoin short position, and you can also take out a leveraged long position if you wish. And this is just at launch, and then the initial focus, version 1, I think, is to build out these DeFi primitives for developers who are looking to build out their own or other ecosystems on stacks, really. And also, you say you want to simplify the user experience for people coming from CeFi to DeFi to, I suppose, attract not necessarily the mainstream, but that will come later, but people who aren't developers to help broaden the stack's user base. So if that's kind of the high level summary of what you guys are doing, I'd love to hear your rationale, Chiente, for why you've, I suppose, chosen Bitcoin and also chosen stacks. Why have you decided to do this with Bitcoin and stacks and not, for example, on Ethereum, which is where, most of the DeFi ecosystem has existed to date?
Sure. We believe Bitcoin is the ultimate layer of money. So, in the sense that if this is the case, right? If you accept my belief or my assumption that Bitcoin is the ultimate layer of money, then to build the financial infrastructures is almost no question you want to build on Bitcoin. And the reason why it was not possible is because there was no smart contract existing to build on Bitcoin. But with Stacks 2.0, which rolled out last year, it enabled us. Suddenly, you can build applications on Bitcoin via Stack smart contract. Now, I would say that, Bitcoin by design is something you don't want to change the code. You want it to be rock solid. You want it to be almost by design inflexible because you don't want to change it, right? Now, with the Stacks 2.0, it enables you to use this smart contract layer, and then you can build all kinds of things on top of it. So now come back to the comparison between Bitcoin and Ethereum, right? Totally understandable that people would question the scalability, the speed, etc., etc. And that's why, as we speak, Andy, Alex is on its course to build out version 2 of Alex. So it's a version 1 is the one that you just mentioned. We came up, we basically built all the primitives, the building blocks for DeFi to function, right? You have ideal launchpad, you have DEX, you have stake, you have yield farm, etc., etc. But really, version 2 is about two things. Number 1 is the scalability, and number 2 is about user adoption, so user friendliness. I'm sure when I talk about Bitcoin, you would have asked me about the speed, right? You just subject to the 10 minutes finality or the block time of a Bitcoin. That's why Alex Chu come up with a scalability solution, which is separating confirmation layer from the settlement layer, right? So when you and I, Andy, we say, okay, this asset we want to exchange with this price, done, yours. I said, done, Andy, this is yours. This is confirmation. So when users they trade, they want the almost instantaneous confirmation. But then the settlement is a separate layer, right? So in traditional finance, settlement is T plus 2, for example. But if you build something on Bitcoin via stacks, the settlement is T plus 10 minutes. So it's much faster than traditional finance. But one thing for sure that we all have to make a tremendous effort, and Alex team included, is about user experience. At the moment, you just have so many different wallets. You have so many different chains. You migrate from one to the other. It's almost like it's worse than flying to another country. So Alex's version 2's vision is to abstract all this complexity beneath the user experience so that the user can seamlessly use Alex from one chain to another, different wallet, onboarding, etc., etc. So does that make sense?
Yeah, it does, Chiente, and I think there's an even perhaps simpler way to talk about this. You posted a tweet a couple of days ago, which I really enjoyed. You said something like, "There's all these men in the Zoom questioning me, why stacks?" And you said one doesn't come, or you referenced a wonderful quote by E.M. Forster, who said, of course, famously, one does not come to Italy for niceness, one comes for life. So in that context, I'd love it if you could explain why you chose that quote by E.M. Forster, because then you said one comes to stacks not because of where it is now, we come because it is going to great places. So please.
I love it. I have to tell you why I quoted this. So, Stacks 2.0 was rolled out beginning of last year. It's really, really a very young chain, right? As a young chain, I think the Stacks philosophy is that, first we want to achieve the decentralization. And then we start thinking, okay, how do we come up with a scalability solution, cross-chain, etc., all these challenges. By the time when we launched our testnet, and everything was launched on the Stacks main chain, and there was no scalability solution, right? So it's very, very slow. And then I got so frustrated, I went to watch Netflix, and I was watching A Room with a View. And then
Yes.
there, you remember that wonderful movie? And then, this woman was saying, you come to Italy for life of it. I said, oh my God, that's exactly how I feel about it. Because ultimately, we are all at the very, very beginning of something big, right? Even Solana is so fast, Ethereum with all this very vibrant DeFi game, all these applications, etc., etc. We're still in the very beginning of crypto adoption. So that's why I wanted to say with this quote is that every time when I talk to investors, the first thing they will yell at me is, why do you choose stacks? Nobody heard of stacks, or even if you heard of it, the stack is so slow. Why do you build on it? I say, look, we just have to grow with it. As long as we believe as long as our conviction is that we want to build on Bitcoin, right? We want to build a DeFi on Bitcoin. Then Stack is a good choice. The smart contract layer is the right choice. We have to grow with Stack's innovation. And Stack is really a very vibrant place, just like Rome. So, different groups, different teams are building fantastic stuff. Cross-chain bridges, Bitcoin native wallet, and different incentives for miners, redesign them, the incentives, etc., etc. So I'm actually very, very happy that we chose Stacks to be our home. And I think since the mainnet January to now, we have proven our use case. We became the biggest project on Stacks, we have more than 8,000 individual wallets on Alex. Every single user that when they have their wallet, they start using Alex. I'm just always very touched. Andy, this is Web3. Nobody can shut down Alex, right?
Right. I love it, Chiente. And look, you're exactly right. And I'm actually reasonably familiar with what is going on in the Stacks ecosystem, partly because of my man Eli Herf, who connected you and I, but he's a wonderful connector across the Stacks ecosystem, and partly through efforts from people such as Eli Herf. I've had a number of guests on this show, the Crypto Conversation, from from everyone from Trevor, from the Stacks Accelerator Fund, to Grace, from the CryptoPunks, and various other NFT marketplaces. So it is all going on in Stacks, and it feels like because Bitcoin is such a huge part of the Bitcoin, of the crypto market, but they've been left out of the kind of the NFT ecosystem, the DeFi ecosystem. But now Stacks is here to the rescue, kind of the Bitcoin superhero that is empowering smart contracts on Bitcoin and making all this possible. And it just feels like it's still a little bit of a secret, Chiente, but that secret is fast getting out, right?
Yes, I was, so Stack ecosystem really well. The community is wonderful, right?
Yes,
It's
yes.
very, very, they are not loud, they are very supportive. So I have lots of my cohorts and also the upcoming cohort that Trevor and Kai and other wonderful people are leading this accelerator program are telling me that they're so happy that they chose Stacks to be the starting point, I would say, because ultimately we want to live in a multi-chain world, just like we want to be able to travel around the world. But to choose a base is very important, where you start your project, especially as a startup. A startup is risky, right? As a startup, you not only have financial risk, you also have a risk of prove your concept. So it is indeed, Andy, a wonderful place to start a project.
All right, I'd love to get your I suppose just we've talked about your vision for DeFi, but just expand on that a little bit, Chiente. And I mean, how do you see DeFi evolving? Let's say across the next decade. What does the adoption look like? Is it across all these different chains? What are the risks? How do you see it happening?
All right, so the lots of really exciting innovation that has happened in the past DeFi summer. A lot of technologies that we use at the moment in Alex is because of those innovations, such as AMM, Curve, etc., etc. So I think those innovations are here to stay.
Yeah.
But there are a few things that we all have to do better. Is that I think we should be more ambitious to convince ourselves that DeFi it is a viable alternative to TradFi and CeFi. So I'm not saying that DeFi is going to take over the whole world of finance, because TradFi has something that most likely DeFi cannot replace yet, and CeFi as well, right? So, but at the end of, I would say in a few years, maybe Andy, you and I won't talk about CeFi, DeFi, or TradFi. We'll just talk about Fi. But whoever come up with the best solution, for example, when we are talking about decentralization, obviously DeFi will be the winner. When we talk about confirmation or settlement without this T+2, DeFi is ahead of, for example, TradFi. But we have to also be aware of the regulatory environment, because where I live in the U.S., even to date, there's no clear regulation about DeFi. An entity like us, we came from traditional finance. We are very much trained to have the regulation environment almost protect the consumers, protect the retail investors in particular, right? At the moment, this is not happening. But a few downside. Number one is you hear all these rug pulls, number one. And number two, so often that information is not transparent enough to protect the community. We call it, retail investor, the community, right? So I think Alex, you know me, you see my face, you know where Rachel and I come from. We don't have an avatar that hide behind a financial services. And I would love to see more of those. I would like to see more DeFi, welcome a regulatory environment that is not going to kill the innovation, but help DeFi to become mainstream in the sense that protect the consumers, protect our community. Does that make sense?
Yes, it does. And I think that leads us nicely to, I think, really the events of the last 48 hours or maybe a few days ago, depending on when I get this podcast published. But I suppose I'm I'm talking about the situation with Luna, UST, the crypto crash, and I suppose the kind of the run on this supposedly algorithmically decentralized stablecoin. That's the vision for UST. It's not there yet, but I'd love to get your take on what you think happened here, and because I suppose the wider context is, I think, shall I verbalize this? Let's just verbalize this. This hasn't been confirmed, but there's this rumor on crypto Twitter, if you like, that the attack on Luna and UST came from Citadel, one of the famously large American hedge funds that has always stayed out of crypto. But there's a little bit of evidence that perhaps they were behind this. And funnily enough, Janet Yellen, she came out within hours of this kind of attack, and she said, stable coins pose this kind of existential risk, and we need to regulate them. And so it's quite convenient that this all happened. I'm not saying that that's exactly what happened, but it is a discussion point, and I think it kind of it speaks to the challenges of building decentralized protocols the right way, and that balance between innovation and regulation that is really playing out in the US and around the world at the moment, Chiente.
Yeah. Did you sleep last night? I don't think I slept much. We were all watching the crash of USD, and praying that it's not going to be a systemic risk, right, for crypto and the broader market. I think that's what we were all worried about. I'm not sure what Yellen is talking about, although I have a high respect toward Professor Yellen. But I want to say something that the bank run is nothing new. I think, in the 15th, 16th centuries already, we had the first bank run, right? A stable coin is very, very similar to a bank's treasury or reserve, right? So it's very much dependent on the faith or confidence of the consumer. Not talking about the bank run, I think that the most recent history, what I would say is most parallel to UST's run is 1992 George Soros bet against the British pound.
Yes.
He famously made $1 billion of that, trades. Now, $1 billion sounds not that much now because fiat money is inflation, but it was a world-shaking event. So what happened? There's really very interesting parallel here, and I only started thinking about today, and I was tweeting my friend about this. So what happened was that at that time, several European countries, they decided to integrate the economy more. So they want to peg their currency. This is the precursor of EU. So it's called European Exchange Rate Mechanism, ERM, right? So it was formed in 1979. Now, those countries in ERM, you usually suspect Germany, France, England, etc., etc. Now, because obviously Germany was a stronger economy, so all these currencies they try to peg to German Denmark at that time. So now, Andy, you start thinking about this peg, right? So just like USD try to peg to US dollar. But the problem is that, okay, theoretically, when everything goes well, all this theory works, right? All these theory, whatever the conclusion about theory, for example, if your currency start moving away from the peg, then what central bank can do, and that's exactly what Luna's reserve are trying to do, is number one, you can step into the market, you can intervene, you can say, I buy more of my currency so that I pump up the price so that I get closer to the peg. So that's number one. And number two, that's really the fundamental of the peg. The mechanism behind UST and Luna is that use interest rate mechanism, right? A country can say, I'm just going to hike my interest rate so that my currency will appreciate. So all this works well on paper, in theory, during normal time. But when the market start losing confidence, when people start getting panic, that's a time when none of this works. And that's what happened. Why Soros made $1 billion is that people just don't believe anymore that England had this huge reserve that can just keep pound peg towards Denmark. And that's when the confidence was lost about USD's pegging to dollar. And the reserve of USD just had to keep on putting up more and more and more collateral to protect it. But, the reserve has to be infinite in order to protect this infinite run. And that's what happened. So history tells us a lot. Anything about a peg, right, works during normal time, but it does not work when panic is there. So that's my take about what happened over the past 24 or 48 hours. I'm really glad that the situation seems to become calmer now. I think the US last night I saw was about 90 cents. So it's getting calmer. Citadel or not Citadel, Citadel could be our George Soros, right? Yesterday.
Yes.
One thing good about blockchain is that data are there, transparent. So it's hard to hide. So I think very soon we will see lots of more analysis coming out if it's Citadel or not. So, but I do see, the analogy or the parallel of, Soros and his trade of British pound and this bank run against UST. Does that make sense to you?
Yeah, look, it does, and I completely agree about the the George Soros comparison, and that's just such a famous one of the trades of the century. The short against the pound, and it makes me, I kind of get a little bit get chills a little bit thinking about how, as much as all of us here in the trenches and crypto, because, Bitcoin is so new, we're only really, 12, 13 years into the blockchain era, the Bitcoin era, and already we're seeing these incredible kind of financial events that are having impacts around the globe that have started from the wonderful world of blockchain. And so while, it has been another scary crypto crash, a kind of, one of crypto's first global bank runs, we kind of got a front row seat history in the making. So from that perspective, it's kind of exciting, Chiente.
It is exciting, and it does come back to what in the beginning you and I have discussed about traditional finance, rule-based investing, is that, history repeats itself. But once we agree on that, we learn, right? After this bank run, after what happened over the past 48 hours, hopefully the next stable coins will be designed better, right? those stable coin which is, have a fiat reserve seems to survive well, right? And
Yes.
there's another thing is about the design. Again, arithmetic stable coin is very, very smart. And I understand people love it because it's decentralized. But theory works during normal time and it breaks down when crisis happen. Another thing, what happened in TradFi over the past, I would say, 24 hours after Powell came out and announced a 50 basis point hike. In the beginning, you remember the market rallied, and then the next 2 days were just bloodbath.
Yes.
And 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 the reason why people were so nervous of this particular market sellout is not that, okay, we know inflation is here, we know Fed is going to hike another 3 times 50 basis point to contain the inflation. We know the growth is going to slow down. It's because the correlation between stock and bond suddenly broke. What it means is that, usually we are told that, 50-50 balanced portfolio, 60-40 balanced portfolio means that, if you put 50% into stock, 50% into bond, and when stock perform well, bond doesn't, and bond perform well, stock doesn't. So you have a natural hedge, right? So you feel safe. But what happens is in this extreme market condition, the correlation completely breaks down. Is that both got sold off. So think about our pension fund. Think about, in the US, we call it 401k, very nicely balanced, but it doesn't matter what you did in the past 48 hours. It doesn't matter how your allocation look like. We all lost money. And I think that's what shook the world in the past 48 hours. And the last time this severe decorrelation of stock and bond that happened in such a severe way was around 2008, the global financial crisis.
Well, so if that is the case, and that's brilliant context, Chiente, and I know this speaks wonderfully to your experience, but if during the last 48 hours, then there's no doubt everyone has seen the value of their portfolio, if not cut in half, at least given a severe haircut. And I'm not just talking about crypto, I'm talking about all markets, of course. But then going forward, Chiente, I'd love to get your perspectives on what you think maybe happens next. Understand this is just kind of speculation, but because there's all these different ways that we can look at trying to put a value on Bitcoin. You can look at it from the perspective of network. As a network that's growing, Metcalfe's law. You can look at it as digital gold, a hedge against inflation. There's different ways of looking at Bitcoin, but is the global macro environment harder now for crypto? The Fed is tightening. There's an end to this kind of easy money at the moment. There's a little bit of fear in the market. So what next for crypto?
Right. So a lot of questions packaged in your last
Sure.
question. And
Yeah.
I would say there are a few. Let me rephrase into a few questions.
Please.
Number one is about the global economy, right? After this sell-off over the past, today it was a little bit better in the US. At least it's a flat or a little bit up, right? So let's say prior to today, the 48 hours brutal sell-off, where are we going? So I think that was number one your question. But in conjunction, in the framework of crypto, where we are going, right? So number one, the observation is over the past few months, crypto was highly correlated with tech stocks. Why? I think lots of people have been asking why. Why didn't crypto or Bitcoin perform what it's supposed to perform, which is a decorrelated asset, which should hedge against inflation, etc., etc. And I think what people have been observed is that number one, the flow or the actors that are trading in and out of crypto are the same actors as the one who trade the growth stock in and out. And therefore, the performance of these two asset classes are highly correlated. But it doesn't mean that what you and I believe about the mainstream or wide adoption of a Bitcoin as a money layer is going to be stopped, right? We are still, again, in the very beginning of this adoption. If we all believe that Bitcoin ultimately is going to be the store of value, is going to be at least part of a payment system, then Bitcoin's value have to go up. So that's a long-term trend. That's just no way to be avoided. That's a long-term trend. Yes, there's a short-term volatility around it. For example, what we have to observe in this very early adoption phase, that's for sure. Early adoption phase of any new tech is going to be very volatile, and it needs to settle down. And we are on the path of it. So that's number one. Number two is about the global economy. Yes, it was scary the past 72 to 48 hours, and that's because all three main engines of global growth are slowing down. We are talking about the US, the Fed is withdrawing the liquidity. We are talking about Europe that has a war within its border. And we are talking about China that currently is doubling down on the zero COVID policy.
Yeah.
But Andy, none of these are permanent, right? Fed, as soon as the inflation come down to the natural range, as soon as the interest rate come up to the natural range, then they want the economy to grow, they will start cutting rate, and that's when the risky asset will start rallying. That's about Fed. Europe, the war is not going to be forever. Somehow all the war will end with high cost, but it will end. COVID, China's COVID, it will end as well. It just at the moment we see all the headlines that is very, very scary. But as soon as we see a clear catalyst for growth, then the bottom is over. So I'm still very optimistic because business cycle is somehow natural. Obviously, when it's going down, we all suffer, but we have to learn from history as well. It's a cycle, so it's going to come back. So that's about the global economy. So to answer your question in a very, I would say, in a very short conclusion is that you and I and the people who are in crypto still believe in the adoption of Bitcoin or other cryptocurrency. It can be a stablecoin as well to become the meaningful payment system of the world. If that's the case, Bitcoin price has to go up, and that's why we want to hold Bitcoin. That's number one. Number two, global economy. As soon as we see a clear catalyst for growth, the sell-off will be over.
Yep, makes sense. Chiente, I very much agree. The path for Bitcoin is always going to be volatile, but ultimately we know where Bitcoin is going. And, as I said before, we all have front row seats to the best show on earth. And in my opinion, the best show on earth is Bitcoin. Simple as that.
Yes. Well said.
Let's go to a break, Chiente, and then we'll come back. We're going to have some fun. We'll run you through the very famous Crypto Conversation Hot Take Round. We'll be back in 1 second.
Here's what's being said about Masterworks.
My name is Jacob N. I'm from Long Island, and I've invested over $73,000 with Masterworks. My portfolio performance just wasn't cutting it. I researched all these alternative investments, like crypto and NFTs, but they didn't make sense to me. Then I read about Masterworks in Forbes, and I signed up right away. And now you can too. Thanks, Masterworks.
Get VIP access at masterworks.io and use promo code JACOB. See important disclosures at masterworks.io/DC.
All right, we are back, and I'm with Chiente Hsu. Chiente is the ex-managing director and global head of quantitative investment strategy and research at Morgan Stanley. She is now the co-founder and I think CEO, or co-founder at least, of Alex, the open source DeFi protocol that is being built on the Stacks blockchain, of harnessing the power of Bitcoin through Stacks smart contracts. Wonderful to see. Chiente, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Of course.
All right. There's no right or wrong way to do this. Don't worry, Chiente. I'm just going to run you through some questions. Quick, snappy answers, hot take style. Approach this any way you want. The first question is, where would you say you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Multi-chain.
Very good. Okay. What would you say is your firmest conviction crypto opinion, Chiente?
Bitcoin is the most decentralized and secure blockchain in human history.
Yes, I very much agree with that. I would almost argue that there are no other decentralized blockchains right now, but Bitcoin is certainly leading the decentralized charge. Very good. Chiente, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So anything you like here, DeFi, Bitcoin, blockchain, what does it look like in 10 years' time?
In 10 years' time, there will be no DeFi, CeFi, or TradFi. There will be Fi.
I love it. There will be Fi. Flip side of that, of course, is William Gibson, famous sci-fi author. He said that the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
Alex is your Goldman Sachs already on Bitcoin. I keep on telling my mom. My mom said, "Where is Web3? Where's Web3?" Yeah, Mom, this is Web3.
That's right. So we need to let Elon Musk know about Alex, because he's always looking for Web3. He can't seem to find it, but he's a busy man.
Very busy.
Let's zoom out for a second, Chiente. We'll zoom out and even get a little bit weird for a second. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
Ooh, that's a tough one. I want to say, and I think I have tweeted once, is that I want to be a utopia thinker, but I want to be a pragmatic actor.
Yep, I like that. That makes sense. And give us the rationale for what you mean there. Give us an example.
Because often utopia is a corner solution that is very hard to achieve or is not optimal for the majority. Be pragmatic. You have more probability of achieving Pareto optimal. I know I jam in a lot of words that the economists use it. What I want to say is that to achieve the good for the majority, often the corner solution is not the best. Such as I think last time you and I discussed a little bit about complete decentralization. Right. If you start with complete decentralization, often it's difficult to get things done.
Yes. And decentralization is it's a journey. It's not a destination.
Yes. Well said. It is a journey. Well said. Yes.
And finally, Chiente, what is your favorite science fiction book, film, TV show, or universe?
Oh my God, recently I have been in love with the film The Arrival. Have you seen it?
No, I have not, but yeah, that's I can see it has been quite popular. I see a lot of people talking about it.
Yeah, and then subsequently I bought the book. I'm just fascinated by it, about how Andy, you would communicate with alien when they came to the world.
Yes.
And when they try to save the world. I find that film fascinating, and the book as well. But
Fantastic. The arrival. There you have it, listeners. Chiente, this has been excellent. Very, very much enjoyed talking to you today. We come to the end of the show. Nothing else to do except hand the metaphorical microphone back to your good self. Could you please tell the listeners where they can find you on Twitter, wherever else you like to hang out on the internet, and please give us, your final thoughts on why Alex is the future and where people should go if they want to learn more about what you guys are building.
Sure. I would say Rachel, my co-founder, and myself, our vision is for the finance of the future will be the one that is decentralized and accessible for everybody. And our Twitter is at AlexGoBTC, and my own Twitter is Rulebased Invest. And you can find Alex, the app is app.alexlab.co.
Awesome, and I'll put links to most of those in the show notes. Thank you very much, Chiente. All the best. I'd love to have you back sometime. We'll do this again, I'm sure. But for today, all the best, and bye for now.
Thank you, Andy. Thank you for having me.
All right, there you go. That was Chiente Hsu from Alex, building DeFi on Stacks. Really enjoyed talking to Chiente. Hope you enjoyed listening to her. I hope her mic was okay. We stopped at the beginning because I was a bit worried as to how she was sounding, but she was just on Apple AirPods, and they're great. I've got Apple AirPods. I love them, but I don't really use them for podcasting, but a lot of people do, so that is sometimes you just got to run with it. But I thought Chiente was excellent, one of my favorite guests in recent times. Got to give a shout out, of course, to my man, the notorious Eli Herf from the Stacks ecosystem. Thank you for connecting me with Chiente. Also, shout out to anyone else building in Stacks, and of course, to the wonderful Stacks dads. If any of you are listening, shout out to the Stacks dads. You know who you are. If you know, you know. All right, team. Thank you very much for listening. Was there anything else I was going to mention? Probably, but I've got another podcast in 8 minutes, so I better get out of this one. Thank you for listening, team. Don't forget to subscribe to the Crypto Conversation podcast in whatever podcast app you are using. Please do give us a nice 5-star rating, even a review in Apple iTunes or the Apple Podcast app. Apple segments reviews and ratings for all the different markets around the world. So some we've got heaps of ratings, some we've got none. So if you're listening at the end of the show, listeners, please always appreciate your support. If you want to get at me, you can hit me up on Twitter at AndyPickeringNZ, or listeners, you're always welcome to drop me an email, andy@bravenewcoin.com. All right, that's today's show. Thanks for listening, team. This was the Crypto Conversation for Brave